Peter, thanks for coming in. Well,
Morning.
is this medicine going to work, do you think? Or do you think we can have a managed calming down?
Well, I think it probably will work to that extent. I think we probably will see a bit of a slowdown in the rate of property transactions going forward over the next month or two. And we may see a slight correction in prices, just as we did after the last measures the government introduced a few months ago, when the following 6 weeks or so we saw property prices off around 1 to 2% over that time.
So quite slow. I mean,
very slow.
But how significant are these two sales of these sites in Kowloon?
Well, they're quite significant, and I expect that following the government's measures last Friday, the bidding will be a little bit tempered from what we've seen in previous land auctions, where bidding has been pretty high and not really on the high side of expectations. This time I expect it'll be in the middle to the lower side of expectations, but not dramatically down.
It's a bit of a strange one, isn't it? Because on the one side you want the government to, whether they want basically prices to calm down, perhaps go down a little bit, just become more manageable. Then when they want to auction these bits of land,
they want the highest possible price.
Exactly. So where does that leave them?
It's a great conflict. It really is a great conflict. But I think the overriding motivation right now, quite frankly, is really to de-risk the banking system in Hong Kong and also in other parts of the region where property prices are up 20, 30, 40% from their low points a year ago. So it's really about de-risking the banking system, taking out the excesses of lending. For example, nearly 60% of all bank loans in Hong Kong go to real estate of one kind or another. So it's a big exposure of the banks to that sector. And of course, we don't want to see systemic risks in the banking sector, because that was what created the global financial crisis, was property bubbles and excess lending to real estate.
Yeah, absolutely. How does this compare to what we saw in 1997 here in Hong Kong, when we had that property market bubble and the bursting of it? I mean,
it was way worse at that time. The affordability factor was way worse. We were 1.5 standard deviations away from the long-term average affordability ratio. Today, we're just about on the long-term average, and that's because interest rates are so low. So interest rates are actually helping keep affordability for your entry-level property in this market pretty reasonable right now. The high-end housing, well, that's a different story altogether.
Where is the demand coming from property here? Is it driven by speculators? Has it been driven by speculators, and have they come from the mainland, for instance, of China?
Well, probably, I think we overstate the influence of the mainlanders in the local market. It's very rare to see the mainlanders more than 8 or 9% of the buyers of any new development coming on the market. Typically, it is locals, that's for sure. 90% plus are locals, but we shouldn't deny the fact that the mainland money is having an impact, and it's certainly at the top end of the market, not so much on the low end of the market.
So what about these measures that they've done to cool the property market in China itself? Does that have an impact in Hong Kong?
Well, it probably should, because it will tighten liquidity to a little bit in Hong Kong. But I can't think it's going to have the same effect that it'll have in China. I'm expecting property prices in China could correct in many cities by 20, 25, even 30% as a result of these measures.
So
but
you see
not
that
so much here.
You see that one as being far more fragile than the Hong Kong property market?
Oh, absolutely, because the market is way more speculative. There are whole developments in China, thousands of flats that are sitting empty, being bought by speculators and not genuine end users. So when these people get tightened on their financing, they're going to face some real problems in China, and I think the government recognizes that.
Very quickly, talk to me about property hotspots in this part of the world. Where would the speculator be, or should
Well, I think Singapore has done extremely well, and Singapore's population growth strategy and its strategy to grow its private wealth management business, I think, underwrites that market quite well. The other market that I still think is going to do quite well in the medium term is Hong Kong, but very long term, Shanghai. That will be the financial center of the region.
Peter, thank you very much indeed. Peter Churchouse there.